Welcome to Bloomberg Law. I'm Lee Pacchia. At the beginning of the year, the conventional wisdom was that 2011 would be a blockbuster year for mergers and acquisitions. Joining me now to discuss the state of M&A in 2011 is Frank Aquila. He's a partner at Sullivan Cromwell, based here in New York. Welcome back, Frank. Thanks for coming.
Good to see you, Lee.
Likewise. So, news of the week is that Google is involved in a potentially blockbuster purchase of Motorola Mobility in a deal worth $12.5 billion. When you take a look at this transaction or the proposed transaction, what jumps out at you?
Well, I think a couple of things jump out. One is that the mega deal is not dead. Secondly, that companies, despite the volatility in the marketplace, in the capital markets, are prepared to do important strategic deals. More importantly, though, I think it represents a convergence of different technologies, whether it's Google and what the platform that they've built, and the fact that people are moving away from the web as we know it, the traditional web, and more to mobile devices. And I think it also points to the fact that the intellectual property of a lot of companies really isn't reflected in their market price. And that intellectual property, as we saw in that transaction, is clearly worth an enormous amount to a company like Google.
Right, jumping on the whole notion of IP valuation, there's a story out in Bloomberg today, really fantastic. It says that Kodak has patents that could be worth, according to some estimates, up to 5 times what Kodak is currently worth today as a company. What to make of that? 5 times is an enormous discrepancy. How does that happen? Have you ever seen anything like that before?
Well, I think a little bit back to what went on in the 1980s, and when the Carl Icahns and Asher Edelmans came along. Basically, what they did is they looked at a lot of companies that were no longer all that profitable, and essentially what they did is they said, "Wow, the real estate value of the company is worth more than the market cap." And so I think you do find periods of time where the intrinsic value of the company, what the some of the assets are, can be greater than the market cap. And I think given the way market capitalizations have been beat down over the last few years, you find certain big companies that have almost half, sometimes more than half, of their market capitalization sitting there in cash. So it's almost as if the market's not even taking into account that they have accumulated X billion dollars in cash.
Fascinating story. Just want to touch on the Google deal before we move on. Do you think it will survive antitrust scrutiny? They've been looked at quite a bit by regulators as of late.
Well, I think there's the Hart-Scott-Rodino process, and that looks at the combination. And certainly any deal of size, any deal that involves a very large company, the government is going to look at. That doesn't mean that there are substantive antitrust issues. As far as I've heard, there doesn't appear to be, but you have to be closer to it. And the government, if they have a notion, they will certainly look at that and press it. I don't see it being blocked, but you never know.
We'll have to see how it goes. Let's take a step back and look at the global or the macro picture. It's been a turbulent couple of weeks for the global economy, particularly the United States economy. Now that the debt ceiling situation has been resolved, looking back, sort of
pushed to Thanksgiving,
pushed out a little bit. Did that whole episode have any direct effect on M&A in the United States or globally, for that matter?
Direct effect, yes, because when there's uncertainty. Uncertainty in the capital markets is not good for M&A, but more than that, uncertainty and questions about the global economy persist, and that certainly slows people down. Will there be deals that don't happen as a result of it? Sure, but those are deals that may or may not have happened. They're at the margin. The core strategic transactions will in fact happen. What happens, though, is that people go slower. People think twice about it, the price negotiations take longer, whatever it may be. Ultimately, those deals, the really important, the really key strategic financial deals get done. It just takes longer to get them done.
So what do you expect going forward for the remainder of the year? Are things going to get better or worse?
Well, barring further riots in London and meltdown of the euro and the U.S. continuing to pay its debt, I think we're in a period where we will see a fair bit of M&A. And quite honestly, corporate America and their international counterparts have done in many ways what governments should have been doing the last few years, which is really cleaning up their balance sheet and getting their fiscal house in order. Now, at this stage, they need to, whether they believe there's going to be growth next year, whether they believe we're going back into a recession or it's just going to be a stagnant economy, they still have to figure out how are we going to create shareholder value. And in some cases, not all cases, but in many cases, the answer to that will be the right sort of acquisition. So I think we're going to see a continued spat of M&A activity during the course of the next few months and into next year and possibly well beyond. But I think they're going to be people are going to be a little bit more measured, a little bit slower in pulling the trigger.
Any thoughts as to a particular industry or sector that might be potentially primed for consolidation?
Well, I think if you look at sort of industries that are, a bit weaker, real estate clearly, retail's been suffering, consumer products, they're sectors where I think you'll see a fair degree of activity. If you look at the flip side, those sectors that are doing very well or have exposure globally and high demand from places like China, India, and Brazil, energy, basic materials, high tech, then I think you're going to see consolidation in those sectors. Quite honestly, I think you're going to see consolidation across the board. And I say across the board, not just in sectors, but also geographically. Will it all happen in the next quarter? Will it happen in the next 2 quarters? Of course not. But over the next year or 2 or 3, you're going to see a wave of consolidations. It's just inevitable.
All right, we'll have to see how it goes. Frank, thanks so much for coming in.
Good to see you, Lee.
Likewise. Okay. Frank Aquila from law firm Sullivan Cromwell, based here in New York City. If you'd like to learn more about this issue, go check out our Mergers and Acquisitions Law Report. It's available on BloombergLaw.com and also on the Bloomberg Terminal. I'm Lee Pacchia. Thanks for watching.